How you guys doing out there today? This is Trey with Real Property Engagements. Don't forget, this is a commitment, oath, and obligation. Alright? From me to you. Okay? And let me go ahead and explain this setup here. I figured I'd go ahead and shoot another video in the car. I'm actually at the park with some friends right now. And I was driving for Dallas a lot earlier. Met up with some buddies. Do a couple events after that. But before I get into this little park recreation, I felt burning desire and need to talk about credit, share it here with you guys on YouTube, to my RPE family. Alright? And today we're gonna go over credit. We're gonna go over why it is important to have some understanding, if not all the understanding in the world. 720 credit score, having a 720 credit score versus a 580. Alright? Very important, guys. Credit, in my eyes, is leverage. Okay? And we're gonna just do a scenario. We're gonna just paint a picture here. I do understand that this is a real estate channel. Okay, guys? I'm gonna always talk about real estate. However, there are a lot of different things that I might go over or share that really, other small business owners can use to start up. Okay, so there's so many different similarities and things in common. Period, with starting a business up. But let's stay on track, like I always say. So let's get into leverage, guys. If I had a pancake shop, okay, or a barber shop, or if I was selling bow ties, or if I had a beauty supply store, or if I had a dollar store, okay, or if I sold potato chips, okay, you get it. If I had a small business other than real estate, all right, how would I grow that business? Like, how would I make that business bring in more money? Okay, leverage is my answer. Leverage is my answer. Now, of course, if you get your binoculars or your eyeglasses and you look into many other ways, you might find other ways. But here today we're gonna go over credit, okay? And let's just say I had a pancake shop and I had one famous Amos pancake shop, and this pancake shop started giving me revenue, really good income. Okay, it went from 50,000 and it bumped up to 100,000. Okay, excuse me, guys. I got something to wipe the board off with. A little bandana here. Okay, now let's just say I wanted to grow my business. Let's say I had this business in Dallas and it's doing really good and it's growing, right? And now the people in the state of Dallas, they love my business, they love my pancakes, and they come to me and they say, "Hey Trey, man, I have an aunt in Alabama. You should consider making a store in Alabama." A lot of people in Alabama love pancakes. And at first, you're scared. You don't want to do it. You're not so much of a risk taker. You rather stay the old, mom and pop. Let's just one shop. Let's just keep it at that. But as time goes on, you start to consider growing and expanding. Okay. Now, one of your best ways of growing and expanding would be to utilize your credit. All right. Now, if we're talking about a business, we must make it a bit advanced and say utilize your business credit. Okay. But let's just stick to personal credit. Okay. Because if you have a great personal credit score, you can get business credit. So let's just stick to this scenario. So this one entity is bringing in 100K. Let's not say a year. Let's say it's bringing in 100K a lot sooner. Let's say it's bringing in 100K every 2 to 3 months. Okay, so this business is like $500,000 a year. Okay, you want to grow it. Okay, but all the money that's coming in is only supporting that business. Yeah, you have extra income to ball out and buy whatever you want to buy, take your family out. You have extra income, right? But once that income is gone, you're waiting back on the business return, right? You're waiting. Let's just say your profit this month is about 60K. You got a 60K profit. You go do whatever you want with it. Of course, you have some financial sense. You don't want to just go blow it all, but you got kids, so you want to leave something for them, right? You save some. You think about investing some, right? So you put some to the side, but you have a poor credit score. Okay, so now when it's time for you to grow your franchise and get help from other entrepreneurs and get help from other people, private money lenders, other banks, other entities that can just give you the money on front, you can't get the money because you have a poor credit score or because you paid no attention to your credit. And you're just the type of person that's just like, okay, well, if my business is netting good money, I don't need to have a good credit score, right? But see, there's a small point there. But see, what happens when the unthinkable takes place? What happens when that business gets hit by a hurricane, right? And, God forbid, no one gets hurt, but now the business is down. Okay, so you go 6 months of not making anything from that business, but you still got to pay, the electrical bills. You still got to pay your employees. So now the business is instead of it being an asset, it has turned into a liability in those 6 months. You're getting the insurance, but now it's like you're getting the insurance money because the hurricane hit it. But now it's like, you're taking care of the business now. Okay? If you would have had opened up 4 more shops, those 4 shops could have sponsored or filled in the holes to this one shop, right? But wait, you didn't have you didn't have a way of growing it. You just grew it up and blew it up, and you didn't multiply it. Okay, so here today we're just gonna go over. We're gonna kind of dive in, and if you didn't get what my story, the little hypothetical story I just kind of threw out there, you can just replay the video, guys. At the end of the day, I'm just painting up a picture here. Okay. All right, so now here comes the good part. Here comes what you want to hear, what you came here for. Okay, what's the difference between a 580 and a 720? We won't even talk about having like an 800 plus credit score. What are the advantages in that area? Okay, so let's talk about the people with 580 below credit score. Let's talk about how much money they're losing. Okay, let's talk about how they may think avoiding credit is a good thing, but on the back end, they're losing, right? They're losing all the way around the table. So check it out. 580 credit score, right? You got a 580 credit score, okay? Now, with that 580 credit score, you go and you try to get a car. You got high interest rates. You go and you try to get a house. Now you gotta deal with the right mortgage lender, because not all mortgage lenders are gonna want to help you out with the 580 credit score. But if you keep on searching, you can get a FHA loan with a 580 credit score. You just got to keep digging. All right, you might get told no a couple times, but don't let that stop you. All right, so you get 580. We're gonna just put the same thing that we put from the car. We're just gonna say high rates. Okay, let's just say now you got to put down more. You got a higher down payment. Okay, so we got, I know you guys can see, we got a 580 credit score, and we got a car, high rates, and the houses are high rates as well. Okay, all right, what else we got out there? Okay, if we were to, some jobs, yeah, they check your credit. But most of us are dealing with, a lot of us are dealing with jobs that don't really dive into our credit, right? If you just got a basic job, okay, not really like the career type of job. What else does a bad credit score? You've got car insurance out there. If your credit's bad, your car insurance that can play a role. You got a lot of small miscellaneous bills out there, right? That like your light bill, a lot of different small, your cable bill, your all that stuff, your little small miscellaneous bills, those can be affected, by a bad credit score as well. Okay, so what else can't you get with a bad credit score? Okay, loans from the bank. Okay, you can't get personal loans. You can't get business loans. It's even, you even got, when you try to do real estate investing, you even got hard money lenders that take a look at your credit score. Okay, so loans, you can't get them. Okay, so they tell you no. Okay, and if they give them to you, you're gonna be paying really high interest, so high that you shouldn't even got the loan. All right, so high interest. Now, as you know, we all might have to start off somewhere. We all might have to start from bad credit or no credit. But just know that having a bad credit score, okay, is really affecting you, because you're paying high interest rates on your car. All right, if you try to go get a car, yeah, they're gonna give it to you, but you're gonna be paying a really high monthly payment. Okay, with a lot of interest on top of it. And then you got down payment on the house. Okay, lenders are gonna give you a hard time if they do let you get a house with the 580 credit score. You're gonna have to put down way more. Okay, you're gonna have to put down a lot more money. So instead of that 3.5%, like I talked about on one of my videos, you're gonna have to put down. You might have to put down double. 7%. Okay. Loans, you can hang it up. You try to go to the bank, get a personal loan, a business loan, hard money, you can't get it, guys. Okay, you can't get it. All right, now you have to find, now all your money, a person with a 580 credit score, all their money is coming from their business. Okay, now whatever your business is your business. Okay, but all your money is coming from your business. Now, whether your business is just being an employee, fine. Whether your business is being a small business owner, fine. Okay? But you don't have too much leverage there. Okay? You don't have too many buddies that's going to be like, hey, Tommy, hey, Sarah, here's an extra $50,000 to help out with other endeavors you might have in mind. Okay? You don't have that. All right? When you got a bad credit score, all the money that you have in the bank, in your pockets, or that other people owe you, is just those numbers alone. It doesn't amount to any other. It doesn't amount to any other number. Okay, so if you got a 580 credit score and you got $10,000 in the bank, that's it for you. Game's over. 10,000, capped out, maxed out. That's where you live. 10,000. You got to keep going to work, okay? Or you got to stay in your business, okay? This is why we talk about income producing assets, because when life takes place, okay, people, what if life takes place, right? And now what if you can't go to that job? You can't be that superb employee. What if you get sick, God forbid? What if something happens to one of your loved ones and now you got to relocate? Your finances, you remember that 10K you had? Okay? That same 10K is being what? Tampered with. Okay? So now that 10K might go down to 6K. Okay? And how's your net worth looking? Pretty bad. Right? Because all the money that you're sitting there earning, not only you don't have any income producing assets, which is horrible, okay? You don't have any other streams that just brings you passive income, but you're earning, let's go back to the Pancake Factory. You're earning major bucks from the Pancake Factory, and now something took place, and now you're down. You had 10,000 in the bank. Now you only got 6,000, right? You might have way more, but let's just speak on the 10,000. All right, guys. Now you're down to 6. So now there's an urgency there. There's an urgency for you to start your business back up, for you to keep pumping. Okay. That's the old school way, guys. That's the old school way. That's very shallow. It's very shallow. It's very basic, all right? Step with me over here. Let's talk about having a good credit score. Let's talk about being creative. Let's talk about leverage. Let's talk about dreaming, living, all right? Let's talk about, taking one thing, right, and leveraging it for the next. And taking that and leveraging it for that. And taking that and leveraging it for this. Let's just talk about investing, guys. Finances. So let's get away with the 580 credit score, because we don't want to dwell on that too long. I know everyone looking at this don't want to have a 580 credit score. I hope not. And if you do, please call me, and I will tell you a million reasons of why you don't want to have a 580 credit score. And I'm sorry I didn't go over those million reasons in this video, okay? Okay, guys, so I'm the man. Let's just say you have a 720 credit score, right? What can a 720 credit score do for you? Let's talk about it. The same business owner. So now, here I am. I have a 720 credit score. I'm a business owner. How can I benefit from that? All right? This is how you can benefit from that. We're going to talk about my number one favorite, and then we're going to go into everything else, guys. I'm sorry. My number one favorite is business credit. You can take that credit score and get approved for $50,000 in business credit, $20,000 in business credit, $100K in business credit. And then you can use that, okay, to sponsor the materials in that new business. And you can use that as startup cash to get the new business off the ground, okay? You didn't have to go ask anyone. You didn't have to pull the money from the income that's being made from the one business. You use leverage, okay? Yeah, you got to make payments on this money, okay? Yeah, you got to make payments on this business credit. But if you have a good personal credit score, you can get approved for business credit with a personal guarantee. Okay, we're not gonna dive too hard into business credit, personal guarantee, and without personal guarantee and paydex score and all that other stuff. We're gonna stay on 580 and 720. All right, we're gonna stay on that. Now, my very next thing, guys. If you already have a car, okay, if you already have a car loan, you can get a different monthly payment. So now, instead of making this high, monthly payment, you can refinance your car loan and now go from paying, $300 a month to maybe $150. All right, so you can refinance car loans. Refi car. Okay. Very next thing, guys. You can if you're a homeowner, you can refinance your house. Okay. So, of course, they're gonna check on that credit score and all this stuff. But you can refinance your house. You can pull equity. You can do a cash out refinance. So if you own your home, you can pull equity out of it. Okay. They do check your credit. Of course, you can't have a 580 or anything like that or anything lower. But refinance car and refinance home. So we're gonna put home. Refi home. Okay, and hard money loans. Okay, you can get hard money loans to do real estate deals, and I'm sorry, this is not necessarily for the pancake business owner. But if he wanted to do some real estate investing and he had a great credit score, he can use hard money loans as a way to finance his deals, especially if he wants to do flips. Okay, you got these hard money lenders, they're gonna look into your credit. Okay, so hard money. Now, mind you, going back on the hard money, most of it is based off of the collateral. But like I said, I'm speaking of a certain hard money lenders. They will kind of check up on your credit score. Private money lenders as well. So if there's a rich guy out there or a rich girl who has a bunch of money and does loans, a private money lender. And whether it be a business loan or a loan for real estate, whatever, what have you, they're going to consider your credit score. So here you go. You got a really good helping hand right here with private money. But if you got a bad credit score, you can't get it. You see what I'm saying? You can't get it. Sorry, guys. You can't get it. Another thing. If you already have credit cards, you can apply. You can call your credit card company and you can ask these guys, hey, can you guys give me an increase on my credit cards? Okay, this is going to help your debt to credit ratio. Okay, so this is going to allow you to go from having maybe a horrible 40%, 50% debt to credit ratio to now having a 20% debt to credit ratio because your credit balance has went up $1,000 or $500 or what have you. All right, so increase in credit limit. Okay, I got some notes back here. Let me check through some of this stuff. Make sure I'm going over everything with you guys. Sorry about that, guys. Okay, so we'll stop right there. All right, I got a couple other things, but what we'll do is we'll go over these things again. So here it is. I have a 720 credit score. I'm doing good with my business. I don't necessarily know how to use my 720 credit score as leverage, but I have that. I've gotten the right education on how to attain a 720 credit score. I've went through the motions of sending out the letters and disputing and inquiry removal and paying my bills, keeping everything on time. And not only that, with my credit cards, I'm keeping everything at a 30% debt to credit ratio. I'm keeping my debt to income good. I'm not making, I'm making sure my debt to income is okay, because banks, institutions, and private money lenders, they look at that. Okay. So it's a lot of things I'm paying attention to. Okay. I'm doing great. All right. So let's just go over to the next chapter, guys, really quick. All right. We'll do an overview. And I know I've probably done an overview 6 times already, but before I go on to the next chapter, let's just do an overview. I got good credit here. I can get approved for business credit. Okay. I'm thinking about leverage, right? I can use business credit as leverage. I could use it as leverage in other ways and not technically get money in return, like a loan from business credit, because loans are money, just it's money, right? But I could benefit in a whole nother way with having a 720 credit score by just refinancing my car loan, because now I don't have to pay that much more. Now monthly when I get my bill, it went down, so I benefited, right? I've helped. What did I benefit? My debt to income ratio. So now my debt to income ratio is way better. Okay, so refinancing car, refinancing home, and if I wanted to do real estate flips, I can do hard money, right? Private money, and I could also get credit limit increases. So these are some luxuries, guys. I had a bunch written down on this paper back here, but we're just gonna go. I'm not trying to make the video an hour, for crying out loud. I'm already 20 minutes in talking you guys' ear off. But here are some benefits. Okay, now let's just transition into a real estate way of thinking and using a good credit to leverage income producing assets. Okay, so here we go. Okay, so here it is. I'm a real estate investor and I wanted to use my credit to leverage income producing assets. So let's say I took my 720 credit score and I said, okay, 720 credit score, I need to make some money with you. Talking to my credit, by the way. Okay, 720 credit score, I need to make some money with you. I want to own over 50 homes in the next 3 years, right? So, and I want passive income. Okay, so what will be my equation towards getting 50 homes, using my credit as leverage, and doing this all in the midst of 3 years? Okay, you know what, guys? Let me change that scenario to 5 years. Okay, just so I can make it very easy to explain. So I took my 720 credit score, right? And it's all on your situation. If you're a single guy, if you're a family man, how much money you make, whatever, what have you, it's all on your situation. But let's just say you didn't know much about real estate and you wanted to benefit right away. So let's just talk about the traditional fast way, using the bank's money. Let's just talk about basic fast way, not getting too complex with real estate terms or anything like that, or too creative here. Let's just talk about basic, straight up and down. I got a 720 credit score and all I know how to do is go ask the banks for help. Okay, so I get a conventional loan, right, let's just say the conventional loan was for a $200,000 house. $200,000 house. Now this $200,000 house just so happened to be 6 bedrooms deep. Okay? 6 bedrooms deep. Follow me now here, all right? So, you know where I'm going with this. You live in one, right? And you decide to rent out 2, 3, 4, 5, and 6. So you rented out these, right? And you live in one. Now, let's go over the numbers here. You got approved. You got approved for the $200,000 mortgage, okay? Now the next thing is you had to put down 10%. So you put down 20K, all right? Put down 20K because you got a really good business, okay? Put down 20K, all right? And let's say you're paying about a good, let's say you're paying $2,000 a month. Let's just say that. Okay? 6% interest rate. We'll fill in the blanks later. I'm going to try to sum up the video, all right? Now, you paying $2,000 a month. The house is relatively nice. It has really good equity. It was built in the 2000s. Real good house, okay? You live by a college. You move some college students in, and you rent out each room for $400, okay? You have all the amenities there. So now you're making 4, 8, 12, 16, 20. You're making $2,000. You're living for free now, okay? So now you're living for free. Okay, so all you got to do now is make sure you keep the tenants in there. You're living in a 6-bedroom house. You got your one room. You got the one master bedroom. You're living in there for free. Good credit got you the leverage, got you the deal. Okay, the house is $200K. You got people in it. Mind you, you're up under a 30-year mortgage. However, you're not paying it. Okay, other people are living in it, paying it. Okay, now mind you, you're being a really good landlord here because you're making sure they got all the extra amenities, okay? The cable, the laundry, the parking, all that, what have you, okay? So, but they're paying the mortgage. Like, they are paying the mortgage. 4, 8, 12, 16, 20. $2,000 a month, right? They're paying it in full. You don't have to pay anything. All you got to do is keep it filled up, right? All right, so all the money you're making at wherever you work or whatever you're doing goes straight back into your pocket. You hold on to that, okay? You do whatever you want to do with that, right? Okay, so let's say a year went by. Let's say 6 months went by. Sorry, so much time. And now you're in a position to, let's say now you got, let me erase this, sorry about that. Now you got, I'm going to keep 720 up there because that's what we got. That's what we're talking about. Now, you got a little capital saved up, right? You got a little knowledge too because you've been doing some research and now you know how to acquire properties. So let's say you go out there now and you find a couple properties that are tied up. They're in messed up situations. So let's say you find, let's just talk about the first year, year one. And we're gonna take this and multiply it, okay, by 10. We're gonna take this and multiply it by 5, excuse me. So 5 years, we're gonna get 10 houses a year. All right, guys, stay with me. So house number one, okay? You get that house on a subject to. You find someone else that has a mortgage that's losing it, and they owe. All they need for you to do is make the payments on it, and you're sure you can get the house subject to you because you have good credit, right? And you can put someone in it, and from there you can make the passive income. Okay, so let's just say you get that house and you put someone in it, you're paying the bills, and you're making a whopping $200 a month. Let's say you get another house, okay? And every situation is going to be different. Let's say you get another house and there's a landlord out there. He owns the house free and clear, and he's having problems with putting tenants in it. You tell him, hey, you get the house up under a sublease, and you pretty much get it rented out to someone else. So now you're making another $200 a month, because you're gonna have to pay him his $300, whatever you guys agree on, and you're gonna build a spread there for yourself when you move somebody else in. So let's say you're just making another $200 a month of this house. Okay? Now, you're living in the house. Don't stop. Staying with me, guys. You're living in a house for free. You're living in a 6-bedroom for free because you got people paying the bills for you. You got that all off of the 720 credit score. And you have income producing assets, right? That are giving you $200 a month. $200 a month, okay? Let's say you have another income producing asset here, okay? One's subject to, one's up under a sublease. And let's say you have a duplex under a master lease option, right? So now you got a duplex under a master lease option, and you told the owner that you set up this creative terms where he gets the balloon payment, most of the full principal on the back end, and all you're paying him is the interest for about 2 years. So let's say you're making from these two properties, let's say you're making $800 a month. Okay, duplex. You're gonna have to pay this back on the back end, but don't worry, okay, because that's what you use this for. Okay, so don't worry about the back end payment here, because you could always get a loan and pay that and exit him right out of the situation, right? And then you can use your income producing assets to make the payment on the loan payment. All right, so let's say you acquire another property from a really deep discount. Let's say the property is worth $100K, but you were able to really to buy it for $30,000, right? Because somewhere behind the scenes you got business credit, right? Somebody taught you about it. You got business credit sitting there, and you bought the house on a deep discount. You had to put another $10,000 in it to revive it. But let's say you want to get your money back slow. You got a lot going on. You own the house free and clear. And from that home, you're getting a whopping $1,000 a month, okay? Okay, now, here's another scenario. Let's just say, you went out there, you did your advertising, and someone gave you a call. They were in a real tight situation where they had to leave the state, and they had a bunch of other properties. So what you did was you gave them a down payment, and you set up a seller financing option, and pretty much similar to a sublease, guys. And it's kind of like you're leasing it, but you got that option to buy it. Okay, and you don't live there. You're just putting other tenants in it, and you're gonna have the okay to do this from the meeting of the minds in the contract. Excuse me, cell phone. All right, from the meeting of the minds in the contract. So let's say from this property, you know, from the whole numbers game you set up with the guy, you got to pay him monthly cash, because he owns it free and clear. He wants some cash flow. So let's say you're making just $300 off this property. Now, mind you, you're living for free. All right. So we got to go back over that. So let's add up these numbers. We got 200 and 200. Okay. It's 400. Okay. So we're gonna just go like this: 8 and 2. That's 1,000. Plus another 1,000. That's 2,000. Okay. So we got 2,000, and then we got 3 plus 2. That's 5. So we gotta go 25 a month in passive income, or residual income as they call it. So now, mind you, we're on a track to getting 50 homes. So I only explained 5 random scenarios, but let's just say make up in your own head, or do your research as to 5 other different scenarios, okay, that helped you get streams of income producing assets and passive income. So now you're making money in your sleep. You're making $2,500 from 5 properties. Let's say you do that again, and you're making $5K a month. You're living in a 6-bedroom, you're making $5K a month. And let's do $5K, right? Times sorry about that, guys. And this video is a long one, so just bear with me. So now you're making $60,000 a year. A lot of people don't make that working hard, guys. So you're making $60,000 a year. Passive income, you're on the road to getting and gaining more income producing assets, on top of the fact, okay, on top of the fact that you're living for free. You got guys living with you, and you're living in a 6-bedroom house, and it was all from this 720 credit score, guys. This 720 credit score. Most people don't even get the opportunity to do stuff like this because they don't have that credit score. All right? So it's important, guys. And if you ever need help, you want to learn more about credit, go into depths of it, please feel free to leave your information on my website, realpropertyengagements.com. Okay? This is a commitment, oath, and obligation from me to you guys. So please leave your information on my page and let me know, hey, Trey, I want to learn more about credit. You can call my number on my website. Okay? I can help you get to the credit you need to get to. If you want to do it on your own, I can give you advice on how to do it. You got to pay attention to detail, guys. You got to write stuff down, guys. This is a numbers game, okay? When you get into real estate and you start to pay attention to your credit score, you have to be very observative of small detail, okay? Because if you're going to fix your own credit, you got to know how to not only dispute with Equifax, okay, TransUnion, and Experian, but you got to know which credit agency, which credit bureau might have one thing about me, while the next credit bureau has a whole nother different thing about me, right? So this credit bureau says I owe the gym $200, but the other credit bureau doesn't say anything about it, right? You got to be able to pay attention to these things, right? If you're going to do it yourself. If you want a professional to do it, please contact me, guys. Please contact me. I mean, the guys that I run with, we can increase your credit score, okay, up to 100 points in 4 months. This is what we do, guys. The guys that I know, the entity that I am under, we got it, guys. We got all the materials. These guys have been doing this 10 plus years, okay? Now, I know it's a lot of different credit, fix your credit, credit heaven, miracle credit people out there. I understand that. if you feel more comfortable with whoever is locally next to you, go ahead and give those guys your business. I am talking about obtaining this and higher, so you can improve your business and your life, and you can use that as leverage, okay? And you can go from the bottom to the top, okay? Not overnight, all right, but relatively fast, all right? So please guys, feel free, comment on my video, subscribe to my channel, and I'm logging out, guys, because this video is already really long. And next time you look in the mirror, ask yourself, do I have a 720 credit score? If not, can I get on the road towards getting it? All right, this Trey again with Real Property Engagements, guys, logging out. Much love. Keep peace in your heart and keep pushing for success, okay? Have a good one, guys.